This episode is brought to you by Signed and Sealed Legals. Hello, my name is Crystal Petry, and you are watching another episode of the Crystal Petry Podcast Season 4. Many small and medium-sized businesses don't fail because of lack of vision. They fail because of compliance gaps no one warned them about. Today's guest brings a powerful blend of notary experience and legal education to break down how to properly form, operate, and protect your business while staying IRS and government compliant. This episode is your blueprint for building a business that's not just profitable, but legally sound. Welcome to the podcast, Cathy Wilson. How are you?
Hi, Crystal. Thank you for having me. I'm doing awesome.
I am so glad that you're on because as we are recording this podcast and by the time it goes live, we are right in the middle of tax season.
Yes.
So it is very, very on brand and on point for the season that we are in right now.
Absolutely.
For the small and medium size and large size businesses. So, Miss Cathy Wilson, where in the world are you?
I'm in Newark, New Jersey.
Okay. Are you staying warm out there?
Relatively.
Trying to. Okay, so
as warm as we can be for this time of year.
Yes. I've been watching it on the news. It is chilly where you are. Yes. So let's.
Well, we won't expect anything less.
Right. Oh, that's true. Now let's hop into this podcast. What are some common mistakes you see when entrepreneurs first form their business?
Well, some of the most common mistakes is DIY, just attempting to do it on their own and missing some important steps in the process. So, having a conversation with friends, hey, I want to start a business. And then, it's either, well, I'm going to start a business under my name, not just being educated entirely about the process. So they may start a business, not register the business or form it correctly. And if they happen to form the business, it's not under the correct entity type, right? So an individual who may benefit more from an LLC may wind up pretty much housing their business under sole proprietorship, right? Which can have its own tax complications as the business scales, right? Or improperly forming a business under an LLC when it should be an S corp, that type of thing. And that's one. Secondly, commingling funds, so missing a step, not actually getting an EIN, to establish that, I like to call it the business social security number, right? But not getting an EIN to establish that this is an entity of its own. And so I'm missing the important step that with an EIN, and we can get into that further down the road, it can kind of position you to be able to take advantage of other benefits of an entity, right? So not establishing the business formally in order for it to be recognized as its own entity, and then taking advantage of the benefit that comes along with forming your business as its own entity in regards to ensuring that it's properly registered with the state. Some people fall into that trap of either they're registered with the state or don't fully register with the federal government. So kind of missing some steps in between. Not getting a bank account. So kind of falling into that commingling funds where it's the entity has its own bank account where you can then separate funds. So kind of like those are some of the pitfalls I see when you know individuals try to form a business on their own and miss steps in regards to that.
Now, I do want to give a disclaimer, Ms. Cathy Wilson, to everyone that is listening and everyone that is watching. While I am so thankful that Ms. Cathy Ann said yes to coming on the podcast and speaking about this topic, please, please, please consult your own CPA, certified public accountant. Please consult your own accountant. Please consult your own legal advice when it comes to starting your business, being IRS compliant, registration with your small, medium-sized, large-sized businesses. Please, please consult your own legal advice. Cathy Ann Wilson will be giving very knowledgeable, very educated answers, but they will be general answers. So nothing specific to your company or your corporation. Now, with that being said, Cathy Ann, you stated that one of the mistakes that businesses make is choosing the wrong business entity. Your LLCs, your S Corps, your C Corps, things like that. How does that create compliance issues for later on if you choose the wrong business entity at the beginning?
Sure. So, as I mentioned earlier, when attempting to scale a business, it's important that we are formed under the right entity for being able to scale. All right. So let's assume a sole proprietor who chooses to scale rapidly may face unnecessary personal liability and with self-employment taxes. All right. They can have mitigated with an S corp. They can so with scaling it correctly under the correct entity, they can mitigate tax liabilities, right? An S corp allows you.
It allows you to do what? So what I'm wanting to know is, if you don't get the entity right at the beginning, how can that affect you later on? Or does it affect you later on?
Well, it does affect you later on in terms of tax liabilities.
Okay.
All right,
And
because
is
each
that
entity has its own different tax liability. We call it pass-through taxes, where you're able to then identify that I have employees and I'm able to tax this way or that way. There's double taxation. There's also, and I don't want to get into this too deeply because I'm not a CPA, but there are different tax liabilities for different types of entities. So an S Corp is taxed differently to a C Corp or a single member LLC. A single member LLC can use their social security number in some instances instead of using an EIN, and then they can therefore file their regular 1040 taxes, along with their personal taxes. Well, that's not the same model with an S Corp or a C Corp. It's taxed differently. So different tax liabilities for different formed entities.
Okay. And what documents, whenever you're registering a business, what documents must you fill out or register at the beginning? Documents that you cannot wait until later on to do, or oops, I'll fix that later documents.
Good question. That's going to be a state specific question.
Okay.
Because some states require different types of document. Like I know we push for always acquiring an EIN when forming your business. I mean, the first thing is go over to the IRS website, irs.gov, register, get your EIN, make sure that it's stated clearly the type of business that you're attempting to form, and then you go over to the state and then plug in that information on the state side. Well, in certain states, like for example, Texas, it's not necessary to have an EIN when forming a business, especially with the state of Texas, right? So that rule may not apply. So therefore, you need to educate yourself on the state requirement in regards to that. But I would also say standardly, we would want to visit the IRS website, acquire your EIN, and then go through the steps with registering with your state, because both federal and state does matter when forming a business.
Okay. And just so my audience, my community is completely understanding what we're talking about, can you explain to us and tell us what does the letters EIN stand for?
Employer identification number.
Okay. Employee identification number. So you will hear us talk about the EIN quite a bit during this conversation. Why is an operating agreement essential for businesses, or is it?
Yes, very essential. And I think that's a step that most businesses miss, right? When new to the formation business, you kind of tend to miss that step, right? An operating agreement tells anyone that's engaging with your business how your business runs, who runs the business, who's responsible for what, basically. And in the event of, unforeseen circumstances, how the business is going to resolve issues in terms of if there are multiple members in that business, one person happens to pass, who is the successor? Or how is the business supposed to handle that type of event?
What clauses or what information is often missing in an operating agreement? I know you stated that if someone passes away, then who comes in to fill in that space? What is some other information that is missing in operating agreements that need to be there?
All right, so good question again. A lot of people who choose to do this on their own may choose to go online and get some of those DIY templates, right? Mm-hmm. An operating agreement should always be industry specific, all right? So 10 to 1 of the times, if you do happen to get a template, it's not customized to your business, all right? So being able to identify the type of industry that you're serving, and then customizing your operating agreement to sort of align with that is crucial in having an operating agreement. We see businesses that benefit from actually having a well outlined operating agreement are health agencies, financial agencies, pretty much any company or agencies that are heavily licensed, right? You're not able to just do one of those, not to call any names, just template and just fill in the blanks and so on, right? It needs to be properly well detailed and customized. Include your EIN, include your authorized representative, include all of the managing members, include who is responsible for what. And as I mentioned before, also clearly highlighting in the event of, emergencies or unforeseen events, how the business will continue to function.
Okay. How can operating business agreements protect you, Cathy Wilson? How can that protect you from audits or disputes?
All right. So just to kind of dovetail on what I was saying again, a clearly customized and outlined operating agreement kind of speaks for itself. I should be able to, without even having a conversation with you, or the individual who is auditing you should be able to look at your be able to review your operating agreement and say, I understand how this works. if there are three individuals sitting in front of me, I should be able to identify those individuals based on my operating agreement and their functionality within that company, right? So if I'm auditing, I ask you to present your operating agreement. There are three individuals, as long as you've identified yourself at the beginning of our conversation, then by reviewing that operating agreement, I can understand that Joe is the managing director, Sally is the HR manager, or Jim is the authorized representative. He's the person that's going to be responsible for signing off on documents. If the state needs to contact anyone in regards to the business, they know that they can reach out to Jim to find out, whatever information that's needed.
And how often should you update your operating agreement?
As often as necessary, right? We should definitely want to treat our operating agreement like any other agreement that once we're experiencing life events, we want to ensure that it clearly outlines where we are at different stages of life, right? So we shouldn't treat our business any differently, right? If one of our, say for example, one of our managers happen to pursue their career elsewhere and we're bringing on a new member, our operating agreement needs to be updated. If we then decide to scale and then we chose to change the entity type, right, we can also update the operating agreement. If the ownership structure changes, we then need to change operating agreement, right? So there are different stages of the business where that needs to be. And just as a good house cleaning, I should, for want of a better word right now, behavior, right? Yes. Always take your any document that you have in respect to your business and ensure that it correctly portrays exactly what your business is doing at that stage of the business.
Okay. Let's talk about compliance issues, which I feel like a lot of small, medium-sized businesses sometimes fall into this issue. Why is clean bookkeeping a compliance issue and not just an accounting task, not just something you check off stating that I did this?
So then comes the issue again of auditing. If we file taxes on a regular basis, and our books are not in order, then it does create a lot of it can introduce different auditing issues and also legal issues, right? So we hear about commingling funds. And when we talk about commingling funds, that's when we start using our business funds for personal, right? And vice versa for personal purchases or, personal purchases, sorry. So we want to ensure that our bookkeeping clearly outlines how our business is spending their funds, how they're allocating their funds. It then helps when filing taxes later on, right? It helps with profit and loss statement. It also assists with if we wanted to, if we're attempting to scale, right? We're reaching out to, we're looking for grants, we're looking for investors, that type of thing. It's good to have a healthy bookkeeping style to show these potential investors or whomever is looking to invest in our business that we do have a healthy, our finances look healthy, and we are doing the responsible thing by trying to show how that's done with our company or with the company, sorry.
What do some companies do when it comes to bookkeeping that put them at risk when it comes to the IRS or get them out of compliance when it comes to the IRS and the government? What are some things that they're doing wrong or maybe forgetting to do or just do not know to do when it comes to bookkeeping?
That's a really good question. A lot. The rules in regards to finances change constantly. And if we're not constantly updating ourselves on those rules and guidelines, we can miss those things, sometimes not intentionally. And so, say for instance, there was a new guideline through FinCEN where they were requiring small businesses to register their business with FinCEN just to identify the type of business, um, what is it that the business does, and that type of thing, right? I think it was targeted to more small businesses and medium-sized businesses. And a lot of small business owners wasn't aware. And not registering incurred a fine, I believe, of $500. And so, and longer that was put off there, of course, with the government, there's always going to be an interest accrual on that 500, right? So sometimes not being educated on the requirements for, as a small business, to know what is required at certain points. So there are state filing requirements.
Mm-hmm.
There are federal, again, based on the entity type. There are federal, there are times, like I believe the S Corp carry a different tax filing season. I think they're supposed to file in March as opposed to April. And a lot of small businesses, individuals, because they're familiar with the April 15th deadline, assume that, oh my goodness, I have until April 15th to file, when they would have been out of compliance because filing season for that entity type ends in March. So
Right.
those are some of the mistakes that can easily be made as a small business not being familiar with that landscape.
How often should business owners reconcile their accounts? That's my first question.
Mhm.
What is the meaning of reconciling your accounts? What does that mean?
To reconcile something means to, how can I put this in layman terms? I want to put it like to make it whole, like just to show everything is aligned the way it should be.
Mm-hmm.
So if I state that my spending for purchases on repairs, I swipe my card and I purchase for repairs, when I reconcile my account, it should clearly display that that repair aligns with that purchase, that the company that provided that service,
Mm-hmm.
this is the dollar amount that was spent for that particular repair, aligned with the company that does that. So when I reconcile, that should, if we're using software like QuickBooks and that type of thing, it should definitely speak to, what we indicate the expenses, that we it should clearly indicate that the expenses that we indicated, we use the fund towards, actually displays either on your bank statement or whatever financial institution that you use.
And how often should you do that? Reconcile what you're spending with what you're able to look at. Is that something
Um,
you do every day?
I I suggest doing it every couple weeks,
Okay.
but I know individuals choose to do it every month just because of maybe timing, or depending on business needs and so on. They choose to do it every month, but I would say every couple weeks is a healthier habit.
So at least once a month.
Yes.
Yeah, definitely at least once a month.
Mhm.
What financial record should business owners be able to produce immediately?
Bank statements.
Yeah, okay.
Bank statements, profit and loss statements. um, I would start with those two: your profit and loss, your bank statements, um, receipts, right? If we're talking about reconciling, we need to have the receipts that reconcile with the statements. Um, Yeah, I would want to say we start with that in regards to, we're still talking about reconciling. Sorry. I'm
Yeah, we're
sorry.
talking about reconcile,
Yeah,
but I was asking about your financial records. What financial records should you be able to produce immediately? And you said bank statements and receipts so far.
yes, yes.
Okay.
That's what I would recommend first.
Now, when you say receipts, I'm assuming you're talking about receipts for everything you've spent up to that point.
Correct.
Okay.
It depends on what history of financial that whomever is requesting. So having the statements that correlates with spending for your business,
Mm-hmm.
having your profit and loss statements that correlates again with the statements, and the receipts that also correlate with that spending is to me are the most important things that we should be able to present.
What about filings? What filings do business owners maybe forget to file after they form their business or do not know that they are supposed to file after they form their business?
The most common ones that I see is actually state filings.
Okay.
State filings. So, we hear a lot about IRS and filing with the IRS and taxes and so on. But state filing is also very important. We do have quarterly filings. If we are an entity that has employees,
Mm-hmm.
there's also those taxes that needs to be reported as well. So, and then of course you have like your sales tax. You have different things that needs to be reported. Again, those are specific. So, yeah, so you would have those either annually or you'll have those quarterly or it depends on when if that was established at the formation of the company. I
Mm-hmm.
believe certain websites will walk you through how often would you like to pay your taxes. And so you'd have the opportunity to then choose, I would like to do it quarterly, biannually or annually. And then of course try to remember to do that. There's also what is the name of it? There's also a tax that you will need to do every year, and I think every state calls it
Is it the franchise tax?
the franchise tax. Yes, thank you. Yeah, franchise tax. Some states again don't charge a franchise tax, but I think even California, I think, has one of the steepest tax on that. It's up to $300. So a lot of people kind of miss that. New Jersey, I believe it's 150, and a lot of people wind up getting their formation certificate put on hold because those taxes won't. That particular tax wasn't filed yearly and timely.
And I just want to reiterate something you said because I don't think a lot of people know this, Cathy Ann, that
Mhm.
you can select when you want to pay your taxes.
Mhm.
Most people, most small, medium-sized business owners think that you only pay your taxes in April. But again, as you discussed earlier in the conversation, it really depends on what entity you
Yes.
registered your business as, will depend on
Yes.
when you pay those taxes. But also you can decide if you want to pay your taxes quarterly, meaning every 3 months. If you want to
Mhm.
pay them once a year, you can
Yeah,
decide that during the formation, correct?
that is correct.
Excellent.
And of
So
course, as the
mhm,
business changes, because I think that's also one of the questions, right? Even through the IRS website, do you anticipate within a year that you may hire on employees? Yes or no.
mhm,
But if that changes, let's say you're having a really good year come June or July, and you're like, wait, I'm ready to scale now. I'm getting kind of busy and may need some help. Let me bring on someone part time or whatever the case might be. You're able to then go in either to IRS or the state website and update that information. And then you're able to make the changes there as well to reflect the different,
explain
yeah,
to
changes.
us the difference between your payroll taxes and just your general taxes.
Um, so Payroll taxes, it's, how do I explain this? Um, Payroll taxes correlates, it's more of a federal and state um, guided
Mm-hmm.
tax, right? Because again, that sort of speaks to Department of Labor, it speaks to the state, and there are a lot of benefit ties into actually paying that particular tax. Um, I would just sort of stick a pin in that and say payroll taxes, we also need to clearly define our employee type, because a lot of mistakes that we make is maybe then assigning a contracted employee or a contractor as an employee or employee as a
Mm-hmm.
contractor, right? So as a contractor, 1099, you're not responsible for paying taxes for that individual. That individual is being paid, and then they're responsible for filing their own taxes or paying their own taxes.
Okay.
Whereas an employee, you're 100% responsible for ensuring that they're taxed correctly, right? That you're issuing W-2s, and again, depending on when you indicate that you are going to file your taxes, that the numbers, your payroll aligns, with what is displayed on the what your employee is being paid. Your payroll book aligns with that as well. Um, Without getting into too much, once you decide to venture into that space, right? You do need to get an employer number from the state, right? That then tells the state that I'm paying an employee, it tells the federal government I'm paying an employee, and I'm going to pay these taxes, or I'm going to be responsible for that. Because again, come April 15th, for that individual who's not an S corp, their W-2 needs to reflect what you reported as taxes that was paid.
You have given a lot of great information during this conversation, Cathy Ann, but it can be overwhelming. It could feel overwhelming trying to stay compliant with
Yeah.
the IRS, trying to stay compliant with the government. So, how can business owners stay compliant without feeling overwhelmed and without getting overwhelmed by all of the stuff that needs to happen?
Um, what I've found is each time that I assist someone with through the life cycle of their business, so
Mm-hmm.
from formation to different stages of their business, the state provides a plethora of resources and information in regard to, hey, because you do get those little envelopes in the mail. It's time to file your taxes, right?
Yes.
um, Understanding that you're now a business owner, you're no longer a W-2 employee, and
Mm-hmm.
so there are certain responsibilities that goes with that. So obviously, wanting to educate yourself on, again, this is the type of entity that I now am responsible for managing. And so I just need to ensure that I am compliant. So I would definitely be visiting the state websites to ensure that I'm abreast of any new laws or changes. I'll also apply that same method to the IRS as well, just to ensure, as far as in those two areas, that I'm compliant. On my website, I actually display different different government agencies where you can grab that information. It's real-time information, right? It's a link, and then you're able to get the most up-to-date information. And we know that we're in a space now where immigration is also another layer of
Mm-hmm.
of compliancy, right? So I do have like an e-verify link. I do have a USCIS link. I do have a state and DOL link. I have the federal link. So you can go in at any point and just click on that link and search whatever topic of interest and so that you can then be up to date with that information. And again, everything's going to be state specific. So what may apply in New Jersey may not necessarily apply in Oregon, right? So we just want to ensure that we're just, choosing the correct laws and bylaws that applies to that particular state or entity.
You are a notary and you have legal education background in this information that we are talking about, being compliant, not putting yourself at risk with the IRS and with the government. How does that give you a unique lens on compliance?
Gosh, I practice it myself. So the information that I've gotten, the education I've gotten, it's applied to my business. And so by doing it repetitively, I'm able to then articulate that to my clients, right? Just again, I have live links on my website. So if there is anything that I hear, my ear is always plugged, I'm always plugged in. I'm also actually on the leadership committee with the Small Business Association. So we're up to date constantly on policies and new laws and bylaws and that type of thing. So I'm always plugged in and just trying to make myself to be aware of the most current information that I need to apply to my business and also to articulate to my clients.
As people are listening to you right now, as people are learning from you right now, what steps can business owners take today, as soon as they finish listening to this podcast? What steps can they take to protect themselves in the short term and long term when it comes to compliance with their business?
All right. Educate yourself on what resources are available to yourself, to you in regards to having a healthy business. Reviewing documents, as we touched on earlier, ensuring that the operating agreement clearly articulates the business, ensuring that the formation documents are in place, ensuring that you are under the correct entity umbrella. I would also say get insurance too. I think that's something that we miss, right? For certain entity types, being insured is another way of showing responsibility, right? In the event something happens, I want to ensure that my business is properly protected. So I would definitely today, if you don't have an operating agreement, actually look into actually getting one done. I would also say have a bookkeeping professional, a CPA professional, and a business attorney, even if you want to reach out to your local bar association or whomever, to ensure that your business is properly well formed and you're not exposing yourself to legal liabilities. I know we talk about tearing the corporate veil as a result of commingling of funds, or when you're being audited, there are inconsistencies with your finances. So we want to ensure that we're doing the correct thing, right? So then reviewing all of your documents, ensuring that everything you're aligned for your business is going to be the first thing that we would need to do.
Okay. As we get up this conversation, my final question for you: what is your intention in this space? What is your goal in this space of keeping your small to medium-sized businesses compliant?
Oh my gosh. So my goal is to actually continue to do what I'm doing, to provide that information readily. Because even as we've had this conversation today, some people might look at it and go, oh my goodness, I'm just too busy. Where do I find the time? Right? But reaching out to someone like myself who can sort of ease that burden, right? I'm a barber. I just want to cut hair. I don't want to do the administrative stuff, but who can help, right? Because as a business owner, right, independently, income or nothing flows without your involvement. And so sometimes when you're handling too many things, certain things get missed. So if I start focusing on my finances and compliancy, I might miss 3 customers, which then generates income for me. So just understanding that there's a resource for you, which is a business like mine, that can actually relieve that portion, that aspect of the business. I don't. Some people just don't want to focus on the administrative side of their business. That's not their strength, right?
Mm-hmm.
So they need that person that can come in and ensure that they are compliant. That's my goal for businesses.
Okay. Well, thank you so much, Miss Cathy Ann Wilson. I was about to say Wilson, for coming on and having this conversation, especially at this time, at the beginning of 2026, when tax season is up on us. So thank you so much for the education for myself and for my community.
Thank you, Crystal. I'm happy to be here and impart whatever knowledge and little nuggets that I have that can help you improve the health of your business.
Thank you. To my community, thank you so much for tuning in and watching. You can get Cathy Ann's podcast and all of my other podcasts on YouTube Podcasts as well as Apple Podcasts. And remember, you always have time to listen and learn on the go.